Welcome to another deep dive. Today we're cutting through the noise to get you well informed about a blockchain network that's quickly becoming a real key player in global finance and, well, beyond.
That's right.
We've sifted through articles, research, community discussions too, actually, to bring you the essential insights on the XDC network.
Indeed. Our mission today is to take a really deep look at XDC, fairly known as the Shinfin Digital Contract Network. It's a layer 1 blockchain, often mentioned in the same breath as other big names like XRP.
Okay.
We'll be extracting the most important bits of knowledge, really, from its core technology and unique features, all the way to its real-world impact, especially in, say, trade finance and the tokenization of real-world assets.
So if you've been curious about how blockchain is evolving beyond just cryptocurrency trading, how it's aiming to truly revolutionize complex global transactions, well, this deep dive is definitely for you. We're going to explore what makes XDC stand out, why it's gaining so much traction, and where it's headed. Let's jump right in and unpack some of these really fascinating details. To start us off, then, let's get a clear picture. When we talk about the XDC network, what exactly is it, at its fundamental level?
Okay. At its core, XDC Network is an enterprise-ready, open-source, hybrid blockchain protocol. Being a layer 1 chain means it's foundational, right? It supports other applications built on top.
Right.
And what's particularly significant is its EVM compatibility and its primary focus. That's on tokenization for real-world decentralized finance.
Hybrid and EVM compatible. Those terms, they suggest it's designed with broad utility in mind. Can you break down what each of those really means for its capabilities?
Absolutely. So when we say hybrid, imagine having the transparency of a public blockchain for some things, combined with the privacy and sort of permission control of a private network for sensitive enterprise data. This mix allows for audible transactions on a public ledger, while also facilitating confidential data sharing, which, is essential for businesses. It really tries to get the best of both worlds.
Makes sense.
And as for EVM compatible, well, that just means it follows the Ethereum virtual machine standards for smart contracts. This is a huge strategic advantage, actually.
How so?
Because it lets developers already familiar with Ethereum, which is, the biggest smart contract ecosystem out there, easily build and migrate their applications right onto XDC. Minimal friction. It vastly expands its potential for adoption.
That makes perfect sense. So it's leveraging existing developer talent while offering these tailored solutions for enterprises. Now, what's the engine behind it all? What kind of consensus mechanism runs the show?
Right, the engine. XDC uses a delegated proof-of-stake system. It's called XDPoS, Shinfin Delegated Proof-of-Stake. This mechanism is really key to its design.
Okay.
It ensures remarkably quick transaction times, super low gas fees, and high scalability. We're talking over 2,000 transactions per second, TPS.
Wow, 2,000 TPS. That's fast.
It is, and that speed is crucial for high-volume enterprise applications. The network's growth is also really community-driven, which led to the XDC Foundation forming back in 2021, dedicated to its development and adoption.
You often hear XDC brought up alongside XRP, right?
Yeah.
Especially when people talk cross-border payments. Based on what we found, what are the truly critical differences between them, particularly around decentralization? That seems key.
It is a crucial comparison, yes, since both aim to shake up global transactions. One of the main distinctions highlighted in our sources really starts with decentralization.
Okay.
So the firm associated with XRP, for instance, they operate only 4 out of over 130 validator nodes on the XRP ledger. Plus, they hold roughly 50 billion XRP coins.
50 billion. Out of how many?
That's about 50% of the total circulating supply. So this concentration of holdings and control, well, it often raises concerns about centralized ownership and, potential risks to network stability. It's an ongoing debate.
That's a huge point, isn't it? Having so much supply or validation power tied to one entity. How does XDC's approach contrast with that?
Well, it's quite a stark contrast, actually. The XDC network really emphasizes wider network participation, a more distributed growth model. They've actively secured strategic partnerships and external investments specifically designed to accelerate the ecosystem.
Like what?
Well, for example, the founders used some of their own personal token allocations to secure a hefty $50 million commitment from LDA Capital Limited. That's a global investment group. And that money is specifically earmarked to fund Layer 2 projects and drive adoption.
So investing in the broader ecosystem.
Exactly. This approach, it really underlines a commitment to building a truly decentralized and sustainable ecosystem, fostering growth from a broader base rather than concentrating power. more.
Although, speaking of that debate, I did notice a comment in one of the developer forums. Someone named Coopborgward pushed back, saying, Mate XRP is not centralized, and linked to the validator list. So it's interesting to see those counterpoints pop up. Reminds you these things aren't always black and white.
Absolutely. Healthy debate is important.
Definitely. But, okay, beyond decentralization, which is clearly a major difference, how do their raw technical specs stack up? You mentioned speed earlier.
Right. Performance. XDC shows some really compelling advantages here. While XRP is known for high TPS, around 1,500, XDC actually surpasses it with 2,000 transactions per second.
And that difference, 1,500 versus 2,000, that matters because?
Because it signifies a greater capacity for handling the sheer volume of complex enterprise transactions. Think real-time global trade settlements. Even slight delays can add up to significant costs there, so that extra throughput is critical.
Got it. More capacity for real-world demand. What about the cost? How much does it actually cost to use the network?
Cost. XDC offers a significant advantage here too. Really remarkably lower transaction costs. Our sources highlighted one example, a transaction costing just 0.000268606 XDC.
Which is
approximately, wait for it, 0.000841708 USD.
practically nothing.
Exactly, near zero cost. This drastically cuts overhead for frequent transactions, making microtransactions and high-volume stuff economically viable. And for execution time, XDC boasts ultra-fast confirmation times averaging just 2 seconds, near instant settlement.
2 seconds, wow.
Yeah, that immediate finality is a game changer for businesses needing rapid closure on high-value transfers.
That speed and low cost are undeniably attractive. How did their token economies compare? You mentioned supply earlier.
Right. So XRP has a max supply around 100 billion tokens, with Ripple Labs holding a substantial chunk. XDC, on the other hand, has a controlled total supply, around 37.7 billion tokens.
Okay.
And XDC also uses a token burning mechanism. It's a deflationary model that periodically reduces the total supply. This scarcity mechanism could potentially enhance value over time. And finally, XDC introduces KYC-enabled masternodes. Now, this isn't just a technical detail, it provides an extra layer of trust and compliance that's particularly appealing for enterprises that have to meet really stringent regulatory requirements.
Okay, those KYC-enabled masternodes sound specifically geared for enterprise adoption. But you mentioned needing 10 million XDC and ensuring 100% uptime. That sounds like a pretty significant commitment.
It is.
Does that relatively high barrier to entry, even with things like slashing, does that maybe raise any concerns about, potential centralization of power within the network itself?
Yeah.
Or maybe make it less accessible for broader participation?
That's an excellent question, and it really touches on a fundamental tension you see in a lot of blockchain designs, right?
Yeah.
Stability versus accessibility.
Yeah.
While the commitment is significant, the intent behind it is sort of twofold. First, ensure stability through really dedicated professional operators. Second, foster that compliant environment enterprises demand. The masternode system itself, particularly with the double validation we'll talk about, and the slashing mechanisms, it's designed to incentivize good behavior and deter bad actors, not really centralize control. The random selection for verifiers specifically works against any one masternode or even a small group gaining undue influence.
So the high requirements ensure robustness for everyone.
Exactly. Robust infrastructure, which directly benefits the network's performance and security for all users. It's a trade-off, but one designed for enterprise-grade reliability.
That's a compelling argument for stability and security. Now let's dive deeper into those nuts and bolts. How does XDC achieve these impressive capabilities, especially security and decentralization, through its XDPoS consensus?
Right, XDPoS. What's really fascinating here is the specific design, particularly something called double validation.
Double validation.
Yeah, so unlike some other proof-of-stake chains using single validation, where, one node makes a block, the next one just validates that XDC requires 2 master nodes to sign off on a block before it gets published.
2 signatures per block.
Correct. The first is the designated block creator. The second is a randomly selected block verifier. This random selection, that's the key bit. It significantly cuts down the chances of malicious actors colluding to sneak invalid blocks onto the chain.
So it's like having a mandatory second set of eyes, randomly chosen, basically auditing every single step, ensuring integrity.
Precisely. That's a great way to put it. This mechanism profoundly strengthens security. It drastically reduces the probability of forks, makes the blockchain far more resistant to attacks where, say, bad masternodes try to validate garbage blocks.
Makes sense.
And beyond double validation, the network is maintained by those masternodes we just discussed. The ones needing over 10 million XDC, dedicated hardware, static IP, 100% uptime, they're actively incentivized too, through a reward mechanism.
Yeah.
For every 900 block epoch, 250 XDC are distributed based on their performance, with a sharing ratio for the people who staked XDC to support their election.
And what about stopping misbehavior? What stops a masternode trying to game the system?
Good question. To actively discourage any funny business, XDC has a robust slashing mechanism. If masternodes fail to create blocks when it's their turn, or worse, engage in malicious acts like signing 2 blocks at the same step that's called equivocation, they face penalties.
What kind of penalties?
Could be losing their rewards or even losing a portion of their staked 10 million XDC. This system is designed to heavily incentivize node security and active, honest participation. Makes a whole network much more reliable.
Okay, that covers security from within. What about energy consumption? That's such a huge topic, often a criticism of older chains. How does XDPoS stack up?
Oh, hugely important point for adoption today, right?
Right.
XDC's XDPoS massively reduces energy consumption compared to proof-of-work networks like Bitcoin or even Ethereum before it's merged.
How much difference are we talking?
The numbers are pretty stark. Our sources show that annually, XDC block production consumes about 0.000074 terawatt hours.
Okay, and compared to?
Well, Ethereum's previous proof-of-work consumption was around 20.61 TWH Bitcoin, still around 71.11 TWH annually.
Whoa, that's barely comparable.
It's like comparing a light bulb to a small city, yeah. It makes XDC a vastly more sustainable, environmentally friendly solution. That's a critical factor for attracting institutional partners looking at ESG goals.
That's an incredible difference. Really impactful for any enterprise conscious of their footprint. So putting it all together, double validation, masternode, slashing, low energy deed, what does this mean for overall network security against common blockchain attacks?
It means XDC has engineered this multi-layered defense system. It proactively addresses a whole range of vulnerabilities. It's not just one feature, it's the integrated architecture.
For instance?
Okay, so things like nothing at stake attacks, handled by the predetermined block order and double validation. Long-range attacks, trying to rewrite history. Thwarted because a block is only finalized after 34 of masternodes verify it, makes creating a longer fake chain incredibly difficult.
Right.
Even censorship attacks are deterred by the high cost of controlling 34 of the nodes and the incentive structure. Relay attacks. XDC supports EIP 155 for robust transaction verification across chains.
And the core consensus itself.
Fundamentally, it leverages the Istanbul Byzantine Fault-Tolerant Consensus IBFT. That ensures immediate block finality, higher throughput, strong fault tolerance, basically no temporary forks, and transactions are truly final once confirmed.
And external threats, like DDoS.
Masternodes run on secure cloud providers with DDoS prevention built in. Plus, they prioritize transactions with higher fees to deter network spamming. It's all about building this enterprise-grade security architecture, providing that foundational trust needed for institutions.
It's clear XDC has robust, really well-thought-out tech. But where does this technology truly shine in the real world? What are its most impactful applications right now?
Okay, real world. XDC is uniquely positioned, I think, to tackle significant systemic challenges in global commerce, particularly in 2 key areas: trade finance and real-world asset tokenization, or RWA.
Let's start with trade finance. What's the problem there?
It's a massive global industry, but it's still plagued by high costs, sluggish speeds, and a huge lack of access to funding, especially for small and medium-sized enterprises, SMEs.
Right.
In fact, this trade finance gap, the unmet demand for financing, it ballooned to something like $1.7 trillion in 2022, and SMEs bear the brunt of that.
So XDC is trying to make global trade more accessible, faster, cheaper, especially for those smaller players often left behind.
Exactly. XDC aims to essentially liquefy this entire industry, provide a trustless, efficient, affordable, accessible settlement layer for tokenized assets. Imagine streamlining things like digitized bills of lading, automating supply chain finance, enabling immediate verifiable settlements.
Is it getting traction?
The impact is already being recognized. XDC Network is the first, and last we checked, the only Layer 1 blockchain ecosystem member of major global trade bodies like the International Trade and Forfeiting Association, ITFA, the D&I Initiative, and the Trade Finance Distribution Initiative, TFDI.
That's significant validation. Yep. And the other area, RWA tokenization.
Right. XDC is also a leader here. This means digitally representing physical assets. Think real estate, commodities, securities on the blockchain.
Why do that?
It boosts liquidity and accessibility, allows for fractional ownership, much more efficient trading. For instance, Brazil's Vert Capital, they're currently tokenizing $1 billion in real-world assets on the XDC network.
$1 billion. Wow. That really underscores the potential. And speaking of major impacts, there was a huge announcement recently, wasn't there? A partnership that could really supercharge all this.
Yes. This brings us to a crucial development, something that really moves the needle for XDC. Circle, the issuer of the USDC stablecoin.
Like when, yeah.
They've partnered with the XDC Foundation. They're integrating USDC stablecoin and their advanced V2 cross-chain transfer protocol, CCTP V2, directly into the XDC network.
Okay, what does that integration fundamentally mean for XDC and its users? How does it change the game?
Well, it's huge. It significantly enhances XDC's capabilities for dollar-denominated transactions. It further empowers RWA tokenization, expands its DeFi ecosystem. Basically, it allows for real-time, minimal-cost settlements using one of the most trusted and widely adopted stablecoins.
And the CCTP V2 part.
That's the really clever bit. It's a game changer because it enables seamless one-to-one transfers of USDC across multiple blockchains without needing traditional bridges or wrapped assets, which can be clunky or risky.
How does it do that?
It uses a secure burn and mint process. So when USDC leaves one chain, it's burned, and an equivalent amount is minted natively on the destination chain, like XDC. Ensures native USDC is always available.
So it's about making USDC truly native and programmable right there on XDC. Cuts out the middleman, adds efficiency, adds trust.
Precisely. This opens up incredibly powerful use cases. Imagine transferring USDC and it automatically deposits into a DeFi vault on XDC. Or maybe it triggers a smart contract event, like settling a tokenized invoice instantly right after crossing chains.
Oh, automation.
Exactly. For institutions, this means regulated stability, deep liquidity for high-value transactions, really streamlining on-chain settlement in ways that were much harder before.
And it seems XDC isn't stopping there. We also saw XDC Ventures putting $1 million into Casu Finance for DeFi and private credit. And Jam3SGG integrated XDC for Web3 gaming, putting to low fees and speed. It looks like they're making strategic moves across different sectors.
Absolutely. That EVM compatibility we talked about, it allows for really diverse applications from gaming to complex finance. Plus, crucially, the XDC network adheres to the ISO 2022 financial messaging standard.
Why is that important?
It's critical for compatibility with legacy financial systems. It's foundational for true enterprise adoption, letting traditional institutions onboard much more easily. We've even seen recent news like Kraken Exchange listing XDC, boosting US access, and major hardware wallets like Tangem and Sequets adding support. It's all about broadening reach and usability.
Wow, what an illuminating deep dive into the XDC network. We've really covered a remarkable amount from its foundational tech and unique decentralization approach compared to rivals like XRP, to its strong security features, that double validation, and its growing real-world use cases, especially in trade finance and RWA tokenization.
Yeah, we've seen how its XDPoS consensus provides that blend of efficiency, security, and importantly, sustainability. And its clear commitment to compliance and these key partnerships, especially the Circle USDC integration, is building powerful bridges between TradFi and Web3, really tackling tangible economic problems like that trade finance gap.
The XDC network is certainly building a compelling case, isn't it, for its role in shaping the future of digital finance. It's definitely given us, and hopefully you, a lot to think about.
Indeed. And maybe a final thought to leave you with. Given XDC's unique mix of compliance, speed, and real-world utility in a sector as vital as global trade, how might its success influence other traditionally opaque or inefficient financial systems? What aspects of global commerce could be next for a blockchain-powered overhaul? And what new opportunities might emerge for businesses that embrace this shift early? Something to ponder.
Excellent food for thought. Thank you for joining us on this deep dive. Until next time, keep learning, keep exploring, and stay well informed.